Co-investment is this strategy that allows you to pool the resources, financial resources that you have along with other people who also have a similar goal so as to be able to invest in a property. Hello investors and welcome back to another episode. So today we're going to be diving into the very interesting world of co-investment and how it can unlock multiple viable and various opportunities for you as a real estate investor who wants to be able to create wealth for yourself, your future generations, and your family. So grab a notebook and a pen because you are definitely going to want to take notes, or you're going to have to want to make notes of the time markers so that when you do try to come back to watch the video, you will know exactly where you need to go to for each of the points as you're looking for. So first things first, let's start from, and we're going to start from the beginning. What is co-investment? Co-investment is this strategy that allows you to pool the resources, financial resources that you have along with other people who also have a similar goal so as to be able to invest in a property. Now, the property is not expected to be a property that would be one that one person is going to live in, but where it now seems like you're doing a favor for this one person, but it's going to be a property where all of you are able to earn income from it. You're going to be able to gain appreciation from it. And if it is going to be a fall for anyone or either or all of you, because that also is a possibility, then you will all go into it knowing that that is what it is. So let's take a minute to just look at the dynamics of the various use cases that you can use co-investing for. You can use co-investing to, one, achieve the goal of home ownership. You can use it to, two, use it to achieve the goal of wanting to earn income from rental properties. And three, you can use it to build a portfolio that all of you can benefit from. So when you look at the three use cases, you can then match them with whatever goals it is that you have as an individual to know whether it is a right fit for you. But in most cases, at least one of those use cases should be able to satisfy your goals and make you happy. And talking to making you happy, let's highlight on some of the benefits that being able to co-invest would generally give you. So first one would be the fact that you are going to have a shared risk. So think about if you were going to go into a real estate investment all by yourself. That means that you are looking for the property, you're going to have to bear the entire cost of the investment. You're going to have to also bear the responsibility of doing the work, and all those little details. However, if you co-invest, some parts of this entire transaction and journey will need to be outsourced to a third party who would take care of it on behalf of all of you. Two would be the fact that you don't have to come up with all of that money. So if in the case where you were going to do that investment by yourself and the investment was going to cost hypothetically 100 million naira, you would be having to cough up 100 million naira. But if you're co-investing and per chance you get maybe 4 of you together, so it'll be yourself and 3 other people, that means that each of you can put down 25 million naira and still get the benefits that would accrue if you were alone. The only thing that would change would be in the proportion in which it would come. But chances are that because you now have a third party who would be a more professional person, doing that groundwork, then chances are that you may even be able to earn more and then enjoy even more financial returns as you were expecting. A second benefit that you would be enjoying if you go into co-investing would be the fact that you would be enlarging your buying power. And I'll explain. You know how they say that when you're buying things and you're buying more volume, that you're able to negotiate the price, you get the leverage to be able to negotiate the price. That principle applies in real estate. So if I were a developer and you were coming to me to say, oh, you want to buy 1 flat in a block that I have, and I tell you, I said that flat is going to cost you 60 million, for example. If you then changed what it was that you were buying and you were saying that you were now buying 2 or 3 flats, then we could be able to negotiate on that 60 million. So instead of you then paying 60 million times 2 or times 3, which would be the number of the flats that you're taking, you would then probably be able to negotiate me down to say a 50 million or a 54 million thereabout. There would be that concession on what the price of the flats would be, which would also now then transfer also to what your fees would be, your legal, your agency. Instead of you going and having multiple people doing the different aspects, you're having one person, so it just becomes negotiable. It increases your buying power. And when you are able to increase your buying power, it also gives you more leverage that you can capitalize on in terms of how it is that you're going to be able to make more money. And the third benefit that I want to talk about today would highlight on the fact that you would be able to engage expertise, a professional, especially in terms of being able to manage the deal, manage the investment. So if you were going to do it by yourself, chances are that you would say you would manage it, you'd have somebody to oversee it, you would probably get someone who would work with you on the deal, on the investment, and work through it and all. But because they are now yourself and other people, everybody's interest is going to have to be catered to, and no one person is going to want to take that responsibility unless that's their job. And everybody then has to decide that yes, this person is good enough to be able to do it, and do it without any bias to any one person. So co-investment almost always comes as a package deal where you have a professional with the expertise to be able to negotiate, run the deal, manage the property in the aftermath of all of you having put in the investment. Which is why we keep saying that if you're going into co-investment, chances are that you're going to definitely be doing almost no work or very little work at all. For you to be able to manage the portfolio. So those are 3 benefits that you basically accrue when you are going into a co-investment deal. So now that we've talked about what it is, how it is, or the benefits that would accrue to you as an investor, let's talk through how the co-investment process works step by step. As with any investment journey or any investment transaction, you are going to first and foremost have to identify what it is that you're looking for, so that you can find the right property for you to go into as an investment. Understanding who you are, understanding what your goals are, and ensuring that everybody's interests and goals align with the bigger picture is going to be very important. If you have somebody who maybe wants to exit at a certain point in time, chances are that you are going to now start having to put in clauses that would allow for either a buyout by any of the other parties, or even now start thinking about how you're going to sell on a secondary sale for that person that wants to exit. Yes, you cannot always be 100% guaranteed of how it is that each person is, or how long it is that each person is going to want to stay, but chances are that at least if there is a basic agreement that we're looking to create wealth, that each one of you would be able and willing to stay for the long term. Step number 2 would be due diligence. Again, as with any investment, so this is the thing, let's just even create that baseline and reiterate the fact that because it is a co-investment doesn't mean that any of the steps that will be required in a individual investment deal or transaction would then be skipped. If anything, they would now be done even more thoroughly, because it is no longer just one person, it's no longer just 2 people, it's now a group of people. So that means that everything due diligence has to be checked and double checked over and over. Everything that has to do with the plan for maintenance has to be professionally done, so that you're not now having a situation where there's a risk of losing the investment and everybody then loses. If it's one person who maybe has that risk appetite to say, oh, okay, I'm going to take that chance, that's a different thing. But once you're now in a co-investment, the risk, the checks, everything have to pan out and literally just be in their top echelon. So if you ever were going to have an investment deal rated at A+, a co-investment deal would be one of such things, because there's just so much more at stake and riding on the success of that investment. And last but not least, we come to the factor of asset management. Now, asset management is more than just taking care of the property. Asset management is inclusive of knowing what the property can do, knowing what opportunities are in the market, tracking the market to know where it is or what policies may come out that could put that asset or that investment at risk. So we'll take, for example, if there is ever going to be a case where they're saying they're revoking or they are, reassessing title documents of properties in a certain area, if your property is in that area, then whoever it is managing that asset has to be on the lookout to ensure that you're not affected. If in that area there is a change or there is a new uptake or interest of the type of people that come into the area, then your asset manager needs to preempt that and ensure that the property can either adapt, evolve, or be upgraded to now meet the new demand. Because as a property that is going to be for investment, chances are that your actual client type may not be the same. So you may start off by saying you want to just provide housing to people who come and visit in the area and all. And then you'd find that you will have to evolve into being able to providing service accommodation. Or you may have to just pull out all that furnishing and say you are then going to evolve into just fixed annual rent. So there are always going to be different options, and your asset manager needs to be able to coordinate all of that to ensure that everybody is still getting their dividends and their profits and their return on the investment, plus ensuring that the property can keep appreciating so that it remains a viable investment. If anything should happen at that part of asset management, chances are that it would spoil the entire experience and process for everyone, because everyone has then invested and they've become vested in the journey, in the track of what that project is, what that investment asset is, and they're all then looking out for how is it that I'm going to be able to make my money, or how is it that I'm going to be able to pull out. So remember that because it's real estate, it may not fail in the beginning, it may not have issues in the beginning, but in the life cycle of having and keeping that asset, the potential for it may then cause for it to no longer be an asset, an investment, and then have it become a liability. So your asset manager needs to be able to preempt and know the signs to look out for in the event that that's going to happen, so that they can advise you to either dump it or modify it or renovate it as will be needed. Allow me to make a typical example of investments in Lagos, for example, because I can use Lagos very easily, because Lagos is where I stay, Lagos is where I work from, Lagos is my base. It's like the easiest thing that would do. But I would also make an example of Abuja after Lake. So now, let's look at the Yaba and Surulere area. Now, Yaba and Surulere, over time, have been this place that people want to be. People were okay living in the oldish buildings that existed there, because most of the buildings there were quite old. Most of them have been there for so long that we all know that, yes, there's very little of new development. However, because landlords in Yaba started to notice that their opportunity to earn rent is becoming limited, the few newer buildings that were coming into the space were able to charge more in terms of rent, were able to charge more when they wanted to sell their properties, and they found out that they were then getting the short end of the stick, which means that they were losing money, they were leaving money on the table. A lot of them then decided that they would go into regenerate their properties. Some have pulled them down and have built newer structures so that they can change what it is that they're able to get as rental income. Some of them have gone into the modifications. Some of them have acclimatized. So essentially, the general idea is that the property owners who are smart, who want to stay relevant, who want to keep earning money in the market, have gone to acclimatize their properties to ensure that they can earn optimum income from the market, because the market demand is there. There are young people who need to work. think about Yaba being like the tech hub of Lagos, and think about all the young people who need to stay near work because that's where their offices are, that's where the hubs are, that's where the, centers are, so they need to stay there. Think about the young people who then have to either be in transit for short periods of time, and they don't want to have to go through the whole stress of setting up an apartment. Landlords have also adapted and acclimatized to ensure that they are staying relevant in the market and they're able to keep earning money. Now, if we're going to make an example of Abuja, now, Abuja also over time has had to adapt, evolve, because Abuja generally has been a growing city. There's been so much development that has continued since when Abuja was created, in line with the number of people who are also migrating either for work or for business or for family into the city of Abuja. And that in itself has now created for a whole new influx of newer properties, more modern properties, where you would be finding properties that were basic family homes. You're now finding more modern options that are now for even the younger people. Because think about it, like Abuja was initially a place where people were going to search. Abuja became a government city, so it meant that a certain caliber were what we're really being able to demand. But with the demand, the human demand for a different type of property owners, landlords, have also seen that as an investment that was noteworthy. Now think about it, if any one of you here had done a co-investment deal, you would expect for your asset manager, your property manager, to read and preempt the market to ensure that you stayed relevant. If not, you would just see that your investment will be going downhill as against it going uphill as it should be. So I hope that with these two examples, at least you've seen the importance of having the right asset manager, portfolio manager, or property manager working with you on the deal, so that you just don't think that, is it not just for 3-4 of us to come together and decide that we want to do this? Yes, that can work, but chances are that none of you is going to really have the time to be able to do the work that will be needed to maintain that property. And if you truly want to use that strategy to be able to grow and explore the potential of your portfolio, then it's not going to be sustainable, because what you're looking for here is consistent, sustainable income and portfolio growth that you can use to create wealth. And co-investment allows you to be able to take things one project at a time. So think about the fact that depending on your earning power, you are able to invest in 1 or 2 co-investment projects every year. If we look at what your portfolio becomes in the next 5 years, you will be looking at you having ownership ownership in at least 10 properties. So that way you have used co-investment to double, explode, and enlarge what your portfolio and your opportunity for wealth creation has become. And as I begin to wrap up, I want to just also take time to explain how it is that the earnings are actually split amongst people who go into co-investing. Because sometimes we've had people say, I don't understand how, if we contribute different amounts of money, then how do we get money back? How do we share the profit that comes or the income that comes? Now, with co-investing, it's the simplest principle that works and keeps it fair for everyone, unless all of you have decided otherwise, is the fact that each person would get their dividend or their earnings or their ownership shares in the same proportion that they have invested. So let's take, for example, the 100 million naira deal that we talked about earlier. If each of you contributed 25 million, then that means that you're taking and you're splitting all the revenue that comes into 4 equal pieces. Now, if one person didn't do 25 million and maybe did 10 million or 15 million, and somebody else caught up that slack and did the difference, which means that somebody would have 25, somebody would have 25, somebody would have 15, and somebody would have 35. Yes, my maths is good. Then that means that you would share the revenue that comes in that same percentage. And this is what has been a very big principle for ensuring that there is fairness in what it is that people are able to earn. It makes people know that you get back what you put in, and makes people stay committed to the fact that, oh, I want to be able to grow my own equity in this project. So I need to work to increase my capital that I'm putting into it as an investment. I hope this makes sense. I hope this helps to give anyone who's looking to use co-investing as an opportunity to expand their portfolio, to actually use it to get started. Now, because we have a co-investment platform, if you're looking to go into any such deals, maybe with a cousin or some friends and all of that, we'll be happy to have a discussion with you to support that goal. And also, you can visit the platform to also have a check in terms of what property options are available there for you to start getting invested in. Our goal is to help you grow your property portfolio, make real estate investing so much easier, such that you will not only want to invest once or twice, but you would want to be able to do it consistently, because you know that the opportunity exists and you will get paid, as well as being able to build the community and the country or African continent as we all live in. My name is Lerato Lekena-Okoro. I'm a real estate broker, investment advocate based in Lagos, Nigeria. It's been a nice time sharing my knowledge about co-investing. I look forward to seeing you on the other side of the table, where we are all invested in the Nigerian and African real estate market, where we are making money, creating wealth, and living the lives that we want and we've always dreamed of. Till next time, when another video will drop, it's adios.